Hello and welcome. Over the next series of chapters, we are going to embark on a journey to better understand and manage our personal finances. We'll be exploring the world of finance tracker apps, breaking down the most valuable and effective features available to users in the United States today. Think of this as your comprehensive guide to the tools that can empower your financial life. Our goal is to provide you with clear, educational information so you can understand what these applications do. Before we begin, it's important to state that this content is for informational and educational purposes only. We are not providing financial, investment, tax, or legal advice. Always consider consulting with a qualified professional before making any financial decisions. With that said, let's dive into our first topic, the essential foundational features of a great finance tracker. So let's start with a basic question. Do you know with certainty where your money goes each month? For many people, the answer is a bit of a guess. We know our income, and we remember our big expenses like rent or a mortgage payment. But what about the dozens of smaller transactions? The daily coffee, the streaming subscriptions, the online shopping, the lunches out with colleagues. These small streams of spending add up to a significant river. And without a clear view, it's easy to feel like you're financially adrift. This is where a finance tracker app comes into play. It's not about judgment or restriction, it's about clarity. It transforms that foggy, uncertain picture of your finances into a high-definition, real-time dashboard. In the past, diligent financial tracking meant saving every receipt and manually entering numbers into a physical ledger or a complicated spreadsheet. It was a time-consuming and often tedious process. Technology has revolutionized this. A modern finance tracker automates the heavy lifting, providing you with powerful insights at your fingertips. The most fundamental feature, the very bedrock upon which everything else is built, is the ability to securely connect all of your financial accounts. This means linking your checking and savings accounts, your credit cards, and even your loans and mortgages into one centralized application. This aggregation is what gives you a single, holistic view of your financial world. Now, whenever you're considering an app that asks for this kind of access, security should be your number one thought. And rightfully so. Reputable finance tracker apps in the United States use what is known as bank-level or military-grade encryption to protect your login credentials and data. A critical term to look for is read-only access. This means the app can view your transaction history to analyze and categorize it, but it does not have the authority to move money, make payments, or perform any actions within your accounts. This is a vital security protocol that ensures your funds remain safe and under your control. Always review an app's security policies before connecting your accounts. Once your accounts are securely linked, the real convenience begins with automatic transaction categorization. This is a game-changing feature for anyone who has ever tried manual budgeting. Instead of you having to log that $70 grocery run, the app sees the transaction from your credit card, recognizes the name of the supermarket, and automatically files it under a groceries category. Your monthly Netflix charge gets tagged as entertainment. Your payment at the pump is logged under gas and fuel. This automated process happens in the background, continuously organizing your financial life without you having to lift a finger. It instantly brings order to the chaos of daily spending. Of course, no automated system is 100% perfect, and personal finances are, by their nature, personal. That's why the best apps pair automation with customizable categories. Perhaps you have a specific side hustle, and you want to track all related income and expenses in a unique category called My Business. Or maybe you're a pet owner and want to separate pet food from vet visits. The ability to rename, merge, or create entirely new categories from scratch is crucial. It allows you to tailor the application to your specific life and priorities, making the data and insights far more relevant and meaningful to you as an individual. This level of personalization helps you see the financial story that is uniquely yours. With all your transactions flowing in and being neatly categorized, you are perfectly set up for the next core feature: powerful budgeting tools. The word budget can sometimes feel intimidating, suggesting scarcity or limitation. But a modern budget within a finance app is simply a plan for your money. It's about being intentional. A good app will allow you to set spending targets for each of your categories. Based on your income, you can decide, for example, to allocate $400 to restaurants or $150 to shopping for the month. You are in the driver's seat, setting the plan that works for you. The true power, however, lies in real-time budget tracking. This isn't a budget you create in January and forget about until March. The app actively monitors your spending against your targets throughout the month. Many use visual aids, like progress bars or color-coded indicators. You can quickly glance and see that you're halfway through your grocery budget with half the month still to go. Some apps can even send you a push notification if you're approaching or have exceeded a category limit. This immediate feedback loop is incredibly effective. It helps you make conscious, in-the-moment spending decisions, turning your financial plan from a static document into a dynamic, interactive guide. This leads us to another foundational and highly motivating feature: goal setting and tracking. What are your financial aspirations? Perhaps you're saving for a down payment on a home, building an emergency fund for peace of mind, or planning a dream vacation. A high-quality finance tracker provides a dedicated space to define these goals. You can name the goal, set a target amount, and even specify a target date. The app will then help you calculate what you need to save each month to stay on track. Watching the progress bar for your new car fund fill up over time provides a powerful sense of accomplishment and reinforces positive financial habits. It connects your day-to-day choices with your long-term dreams, making them feel more tangible and achievable. To wrap up our first chapter, let's quickly recap. The journey to financial wellness begins with awareness. The foundational features of a finance tracker app are all designed to provide this essential clarity. It starts with securely connecting your accounts to get a complete picture. It then uses automatic and customizable categorization to organize your financial data effortlessly. With that organization in place, it empowers you with dynamic, real-time budgeting tools and motivating goal tracking features. And it must do all of this while prioritizing your data's security and privacy. These core functions work in harmony to provide a comprehensive, understandable, and actionable view of your financial life. They are the essential building blocks upon which more advanced features are built. In our next chapter, we will explore tools that help you manage your liabilities, such as bill tracking and debt management features. Thank you for joining me. Welcome back. In our first chapter, we laid the groundwork by exploring the foundational features of a finance tracker, securely connecting your accounts, categorizing your spending, and setting budgets and goals. These features give you a clear picture of your income and how you allocate it. Now, in Chapter 2, we shift our focus to the other side of the financial coin: managing your liabilities. We'll explore the powerful tools that help you organize, track, and plan for what you owe, from monthly bills and subscriptions to longer-term debts. Gaining control over your outflows is just as critical as tracking your inflows, and these features are designed to bring clarity and order to that process. Let's begin with one of the most practical and immediately beneficial features: automated bill tracking and payment reminders. Late fees are a common and entirely avoidable expense. Missing a payment can not only cost you money, but can also negatively impact your credit history. Bill tracking features are designed to help prevent this. After connecting your financial accounts, a sophisticated finance tracker can scan your transaction history to identify recurring payments. It recognizes your monthly utility bills, your car insurance payment, your rent or mortgage, and other regular debits. It then compiles this information into a single, easy-to-read list or calendar view. Imagine, instead of having to remember that your electricity bill is due on the 15th and your streaming service renews on the 23rd, you have one central dashboard showing you every upcoming payment, its amount, and its due date. This centralization is the key. It eliminates the mental load of juggling multiple deadlines. The most helpful part of this feature is the proactive reminders. The app can send you a push notification to your phone or an email a few days before a bill is due, giving you ample time to ensure you have sufficient funds in your account. This simple organizational tool can be incredibly effective at helping you maintain a positive payment history and avoid unnecessary fees, all by keeping you informed and ahead of schedule. Building on the idea of recurring payments, let's look at a closely related feature: subscription management. In today's digital economy, many of us are part of the subscription society. We have subscriptions for video and music streaming, news publications, software, fitness apps, meal kits, and more. It's easy to sign up for a service, especially with a free trial, and then forget about it as the small monthly payments start to blend into the background. This phenomenon is often called subscription creep. A $5 monthly charge here and a $10 charge there may not seem like much on their own, but collectively, they can add up to a substantial amount over the course of a year. A finance tracker with a subscription management feature automatically detects and lists every single one of these recurring charges in one place. Seeing this complete list is often an eye-opening experience for new users. You might discover you're still paying for a service you haven't used in months, or that a free trial you signed up for long ago converted to a paid plan without you noticing. The app simply presents you with the data: the name of the service, the amount you pay, and the payment frequency. This clarity allows you to thoughtfully evaluate your subscriptions. It puts you in a position to ask yourself, am I still getting value from this service? The app doesn't make the decision for you. It provides the organized information you need to make your own informed choices about where your money is going each month. Now let's move from monthly obligations to larger, longer-term financial commitments. This brings us to debt management and payoff planning tools. Many people in the United States have some form of debt, whether it's from student loans, credit card balances, an auto loan, or a mortgage. Juggling multiple debts with different interest rates and payment schedules can feel overwhelming. A finance tracker can bring all of this information into one place, giving you a clear and consolidated view of your total debt picture. You can see your outstanding balances, interest rates, and minimum payments for each account side by side. Beyond simple tracking, many advanced apps offer debt payoff planning simulators. These are powerful tools that can help you visualize a path forward. Typically, an app might allow you to explore different payoff strategies. For example, it might have a calculator that shows you the debt snowball approach, where you focus on paying off the smallest balances first to build momentum. Or it might let you model the debt avalanche method, where you prioritize paying off the debts with the highest interest rates to potentially reduce the total amount of interest paid over time. It's important to understand that the app is not telling you which method to choose. It is providing a simulator. You can input different extra payment amounts to see how they might accelerate your payoff timeline, or how much you could potentially save in interest. This feature transforms debt from a source of stress into a manageable plan, allowing you to track your progress as you watch your balances decrease over time. To summarize this chapter, the features we've discussed are all about managing your financial obligations with clarity and intention. Automated bill tracking provides a safety net, helping you stay organized and on time with your payments. Subscription management tools shine a light on your recurring expenses, empowering you to be more deliberate with your spending. And debt management features offer a consolidated view and powerful planning simulators to help you visualize and track your journey toward reducing your liabilities. Together, these tools help you build a comprehensive understanding not just of where your money is going, but of what you owe and how you can manage it effectively. They are the logical next step after establishing a budget, helping you direct your funds in the most impactful way. In our next chapter, we will discuss features that help you see the bigger picture of your financial health, including credit score monitoring and net worth tracking. Thank you for joining me. Hello and welcome back to our series. In our first 2 chapters, we explored the features that help manage the day-to-day flow of your money, tracking your spending, creating budgets, and organizing your bills and debts. Now in Chapter 3, we're going to zoom out. We'll look at the features that provide a high-level, big-picture view of your financial health. These are the tools that act like a regular checkup, giving you key metrics to understand your financial standing over time. Specifically, we'll be diving into in-app credit score monitoring and comprehensive net worth tracking. Let's start with a feature that has become increasingly common and valuable in personal finance apps: credit score monitoring. First, what is a credit score? In the United States, a credit score is a 3-digit number, typically ranging from 300 to 850, that is designed to represent your creditworthiness. Lenders and other institutions use this score as one of many factors to gauge the risk of lending money. A higher score generally indicates a lower perceived risk. In the past, checking your score was something you might do only occasionally. Finance tracker apps have changed that by integrating score monitoring directly into their dashboards. This feature allows you to see your credit score, often updated on a monthly basis, right alongside your budget and account balances. The app securely fetches this information from one of the major credit bureaus, like Experian, Equifax, or TransUnion. A very important point to understand is that when an app provides your score in this way, it is considered a soft inquiry. Unlike a hard inquiry, which occurs when you actively apply for new credit, a soft inquiry does not affect your credit score at all. This allows you to monitor your credit health regularly without any negative impact. The primary benefit here is convenience and awareness. It helps you stay informed about this important financial number and notice any significant, unexpected changes as they happen. To make this feature truly useful, the best apps don't just show you a number, they provide context. This brings us to the educational component that often accompanies score tracking: information on credit score factors. To be clear, the app itself is not calculating your score, but it can present you with generally accepted information about the key factors that influence it. While the exact formulas used by scoring models are proprietary, they are typically based on 5 main categories of information from your credit report. First is payment history. This is often considered one of the most significant factors. It's a record of whether you have made your payments on time for your credit accounts. Second is amounts owed, or credit utilization. This refers to the portion of your available credit that you are currently using. For example, if you have a credit card with a $10,000 limit and a $2,000 balance, your credit utilization on that card is 20%. Third is the length of your credit history. This factor considers the age of your oldest account, your newest account, and the average age of all your accounts. Fourth is your credit mix. This looks at the different types of credit you have, such as credit cards, which are revolving credit, and installment loans like a car loan or mortgage. And fifth is new credit. This factor considers how many new accounts you've recently opened, and the number of hard inquiries that have appeared on your credit report. By presenting information on these factors, the app helps you understand the why behind your score, turning it from a mysterious number into an understandable metric. Now let's shift from your credit health to your overall financial position. This is where our second major big picture feature comes in: net worth tracking. Your net worth is a snapshot of your financial health at a specific point in time. The formula is simple. It's the total value of your assets, everything you own, minus the total value of your liabilities, everything you owe. Think of it as your personal balance sheet. An app that tracks your net worth automates this calculation for you. Here's how it works. The app already knows the value of many of your assets because it's linked to your checking, savings, and perhaps brokerage accounts. It also knows the value of your primary liabilities, as it's connected to your credit cards and loans, showing your outstanding balances. By subtracting the real-time value of these liabilities from your assets, it can generate a constantly updated net worth figure. To make this picture more complete, most apps also allow you to manually add other significant assets and liabilities. You could add the estimated market value of your home and car to the assets column, and your mortgage balance and auto loan to the liabilities column. You might also add valuable collectibles or other investments. The result is a single, comprehensive number that represents your overall financial position. The true power of this feature is not in the number itself on any given day, but in its ability to show you a trend over time. A good finance tracker will display your net worth on a graph. Are you seeing a steady upward climb month after month, year after year? That's a powerful visual indicator that your financial habits, your saving, your spending, your debt repayment, are moving you in a positive direction. It can be an incredible source of motivation. It helps you see that even small, consistent actions can lead to significant long-term progress. Again, the purpose of this tool is informational. It is a metric for you to track your own financial journey, not a comparison tool or a measure of personal worth. In this chapter, we've looked at two essential features for seeing the big picture. Credit score monitoring provides convenient, regular access to a key metric of your credit health, along with educational insights into the factors that shape it. Net worth tracking consolidates everything you own and everything you owe into a single figure, giving you the ultimate snapshot of your financial progress over time. These tools lift you out of the weeds of daily transactions and give you a bird's-eye view of your financial landscape. In our next chapter, we will dive deeper into the assets side of the net worth equation and explore the features related to investment tracking. Thank you for joining me. Hello and welcome back. In our last chapter, we took a high-level look at our financial health through the lens of credit scores and net worth. Now in Chapter 4, we are going to dive deeper into a key component of the net worth equation, the assets side. Specifically, we'll be exploring the investment tracking features found in many modern finance apps. Before we proceed, a special disclaimer for this chapter is essential. The following information is for educational and informational purposes only and is not, under any circumstances, to be considered investment, financial, or legal advice. We will be discussing the features of software tools, not recommending any specific investment, strategy, or product. All investments carry inherent risks, including the potential loss of principal. Furthermore, it is a critical principle of investing that past performance is not an indicator or guarantee of future results. Always consider conducting thorough personal research or consulting with a qualified and licensed financial professional before making any investment decisions. With that important understanding in place, let's explore the first core feature of investment tracking: the Consolidated Investment Hub. For many people, investment accounts are spread across different providers. You might have a 401k retirement plan with your employer, a traditional or Roth IRA at one brokerage, and a separate taxable brokerage account at another. Keeping track of your overall investment picture can mean logging into 3 or 4 different websites. The primary function of an investment tracking feature is to solve this problem by allowing you to link these various accounts into a single, unified dashboard. By securely connecting to your investment providers, the Finance app can pull in and display your holdings from all sources in one place. This gives you a convenient, at-a-glance view of your entire portfolio. You can see the total value of all your investments combined, as well as drill down into each individual account. This centralized view is a powerful organizational tool, providing a clear and comprehensive inventory of what you own, from stocks and bonds to mutual funds and exchange-traded funds, or ETFs. Once your accounts are connected, the next powerful feature is portfolio performance visualization. This is where the app takes your data and turns it into easy-to-understand charts and graphs. A common feature is a line chart that plots the total value of your investment portfolio over time. You can typically adjust the time frame, viewing your portfolio's historical performance over the last month, the last year, or since you first started investing. This visual representation can help you understand the journey your investments have taken, showing periods of growth and periods of decline. The app may also show you your performance relative to major market indices, like the S&P 500. This is purely for context, and is not a measure of success or failure. It's simply a data point. It is critical to remember that these charts are a reflection of the past. They show what has already happened. They do not, and cannot, predict what will happen in the future. The value of this feature is in its ability to provide a clear historical record of your own portfolio's performance, all within the same app where you track your daily spending and budget. Beyond just the overall value, the most sophisticated tools offer features for holdings analysis and allocation breakdown. These features help you understand the composition of your portfolio in greater detail. One of the most common analysis tools is an asset allocation visualizer. For educational purposes, asset allocation is a concept that refers to how your investments are divided across different categories, such as stocks, bonds, and cash. An app might display this as a pie chart, showing you that, for example, your current holdings are composed of 80% stocks and 20% bonds. Another layer of analysis is diversification. Diversification is a concept aimed at managing risk by investing across various assets. An app might visualize your portfolio's diversification by showing you a breakdown by industry sector. For instance, it could show you what percentage of your stock holdings are in technology, healthcare, consumer goods, and so on. It might also highlight concentration, showing if a very large percentage of your portfolio is tied up in a single company's stock. It is vital to understand that the app is acting like a mirror. It is reflecting your current allocation and concentration based on the accounts you've linked. It is not providing a recommendation or suggesting that your allocation should be different. It is simply presenting the facts of your portfolio for your own review and information. Finally, it's important to discuss the limitations of these tools. While incredibly useful for tracking, they are not a substitute for professional financial advice. These apps do not know your personal financial goals, your time horizon for investing, or your individual tolerance for risk. The data they provide may also have slight delays and may not always be perfectly categorized. Therefore, they should be viewed as powerful informational and organizational dashboards, not as decision-making or advisory platforms. They bring all your data together to help you stay informed, but the strategic decisions about your investments remain your own responsibility. In this chapter, we've covered how finance tracker apps can help you monitor the asset side of your financial life. They provide a consolidated hub for all your investment accounts, visualize your portfolio's past performance, and offer tools to analyze your asset allocation and diversification. These features provide a level of insight that was once difficult to obtain, empowering you with a clearer understanding of your own investments. In our next chapter, we will discuss features that can help during a particularly important time of the financial year, tax season. Thank you for joining me. Hello and welcome back. In our last chapter, we explored the world of investment tracking within finance apps. Today, in Chapter 5, we're going to address a topic that many people find complex and stressful: preparing for tax season. We will look at the specific features designed to help you organize your financial information throughout the year, potentially making the tax preparation process smoother and more efficient. Before we begin, it is absolutely essential to state the following disclaimer. This chapter is for informational and educational purposes only. We are not providing tax or legal advice. Tax laws in the United States are incredibly complex, subject to change, and depend heavily on your individual circumstances. The features we will discuss are organizational tools. Always consult with a qualified and licensed tax professional or certified public accountant, a CPA, for advice regarding your specific tax situation. The main goal of the tax-related features in a finance app is not to file your taxes for you. Instead, the goal is to solve a common problem: the year-end scramble to find documents and remember expenses. These tools are designed to help you create a system for continuous, organized record-keeping, transforming that dreaded shoebox full of crumpled receipts into a neatly categorized digital file. Let's start with the most fundamental feature in this area: the ability to tag and categorize transactions for tax purposes. You already know that these apps categorize your spending into buckets like groceries or utilities. Tax features add another layer to this. They allow you to add a specific tag to any transaction that you believe may be relevant when it's time to prepare your taxes. For instance, if you're a freelance graphic designer and you purchase a new piece of software, you can categorize it as software and also add a tag like business expense. If you make a contribution to a qualified charity, you can tag that transaction as a charitable donation. Throughout the year, you can apply these tags to any relevant income or expense. The power of this feature becomes apparent at the end of the year. Instead of manually sifting through 12 months of bank statements, you can simply ask the app to show you a report of every single transaction you tagged as business expense. The app instantly generates a totaled list. This feature acts as a powerful sorting and filtering tool, helping you or your tax professional quickly identify the items that may require further attention. Again, the app is not determining if an item is deductible, it's simply organizing the data based on your own inputs. To support this process, many apps include a digital receipt capture feature. The Internal Revenue Service, or IRS, requires that you keep adequate records to prove your expenses, and a simple line item on a bank statement may not always be enough. This feature allows you to use your smartphone's camera to take a photo of a paper receipt right at the point of sale. You can then immediately attach that digital image to the corresponding transaction within your finance app. For example, you take a client to a business lunch. You pay with your credit card, the transaction appears in your app, you tag it as a business meal, and you attach a photo of the itemized receipt. This creates a robust, unified record. The transaction data, your own categorization, and the source document are all linked together in one place. This eliminates the risk of losing a faded thermal paper receipt and provides a clear digital backup for your records. This is simply a modern, efficient method for good record keeping, which is a fundamental part of tax compliance for any individual or business. For freelancers, independent contractors, and many small business owners, another significant feature is automated mileage tracking. If you use your personal vehicle for business purposes, you may be able to deduct expenses related to that usage. To do so, the IRS requires a detailed and timely log of your business mileage. A mileage tracking feature automates this logging process. Using your phone's GPS, the app can run in the background and record every drive you take. At the end of a trip, the app will prompt you to classify it. With a simple swipe, you can categorize the drive as business, personal, charity, or another relevant category. The app keeps a running log of all your business drives, including the date, the distance, and often the start and end points. Many will also calculate a running estimate of the potential deduction based on the standard mileage rate set by the IRS for that year. It is crucial to understand that the app is merely a logbook. You, the user, are responsible for correctly classifying your trips according to IRS rules and regulations. The app provides the tool to record the data accurately, but the responsibility for the data's legitimacy rests entirely with you. Finally, after a year of diligently tagging expenses, capturing receipts, and logging mileage, the ultimate payoff comes from the tax summary report generation feature. At the end of the tax year, you can instruct the app to compile all of this information into a single, comprehensive report. This document typically provides a neatly organized summary of your relevant income and expenses, totaled by the categories and tags you created. It might have a section for all your tagged business expenses, a summary of your charitable contributions, and a detailed log of your business mileage. This report is not a tax form, and it is not ready to be sent to the IRS. Its purpose is to serve as a foundational document for the person preparing your tax return. You can give this report to your CPA, who can then use this well-organized data to prepare your return accurately and efficiently. By presenting them with a clear summary, you may save them time, and in turn, potentially reduce your tax preparation fees.
Disclaimer: the information presented is for informational purposes only, and is not professional financial, investment, or tax advice. All investments involve risk, and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
The report simply streamlines the transfer of information from you to your tax preparer. In summary, the tax-related features within a finance tracker are powerful organizational tools. They help you categorize transactions that may have tax implications, capture digital receipts for robust record-keeping, log business mileage automatically, and generate summary reports to streamline the tax preparation process. They are designed to make you more organized, not to be your tax advisor. In our next chapter, we will look at features that help you plan for the future by exploring cash flow management and financial forecasting tools. Thank you for joining me. Welcome back. In the last chapter, we focused on how finance apps can help organize your information for tax season. Today, in Chapter 6, we're shifting our perspective from looking at the past to looking toward the future. We'll explore the features designed to help you understand your cash flow and project your potential financial path forward. These are the tools that help answer the question, based on what I know today, where might my finances be tomorrow? As we venture into the topic of forecasting, it's crucial to set the right expectation. The features we are about to discuss provide projections and simulations, not predictions or guarantees. They are mathematical estimates based on your past financial behavior and known future transactions. Think of it like a weather forecast. It's a highly educated guess based on current data, but it cannot account for a sudden, unexpected storm. This information is for educational purposes only and should not be considered financial advice. Let's begin with the foundation of any forward-looking view: cash flow analysis. In simple terms, cash flow is the net amount of cash moving into and out of your accounts. When more money comes in than goes out, you have a positive cash flow. When more money goes out than comes in, you have a negative cash flow. A finance tracker automates the analysis of this movement. It typically presents your cash flow in a simple, visual format, like a bar chart. You can see your total income and total expenses for each month side by side. This allows you to quickly identify your financial rhythm. You might notice that your cash flow is consistently negative in December due to holiday spending, or positive in March after a tax refund. Understanding this historical pattern is the first step toward better planning. It provides a baseline of your typical financial behavior. It's not about judging the past, it's about learning from it. This awareness of your cash flow trends is the data that powers the more forward-looking features we'll discuss next. Building on that historical data, the app then incorporates your known future events by creating upcoming transaction projections. As we discussed in a previous chapter, the app can identify your recurring bills, subscriptions, and even your regular paychecks. It uses this information to build a financial calendar. On your app's dashboard, you might see a timeline showing paycheck expected in 3 days, rent payment due in 7 days, and car insurance payment scheduled in 12 days. This feature organizes all your known, predictable financial events into a clear, chronological list. It takes the future transactions you've already committed to and lays them out for you to see, providing a clear view of the demands on your money in the immediate future. Now we arrive at the most dynamic feature in this category: future balance projections. This tool takes 3 pieces of information: your current account balance, your historical spending patterns, and your list of upcoming transactions, to create a projection of your potential account balance over the next few weeks or even months. It's a simulation. The app essentially says, if your known bills are paid on schedule, and if your known income arrives on time, and if your discretionary spending continues at its recent average, this is what your account balance could look like. This is often displayed as a line graph, where a solid line shows your balance up to today, and a dotted line extends into the future, showing the projected ebbs and flows. You might see the line jump up on a projected payday, and then dip down as major bills are paid. The primary purpose of this tool is to help you anticipate potential cash shortfalls. If the projection shows your checking account balance dipping dangerously low, or even into the negative, before your next paycheck, it gives you an early warning. This allows you to be proactive, perhaps by adjusting your spending or moving money from savings, well before an issue like an overdraft could occur. It is a hypothetical illustration, and its accuracy depends on the consistency of your financial habits. This projection capability leads to an incredibly practical and empowering use case. What if scenario planning? Since the future balance is a simulation, the best apps allow you to temporarily change the inputs to see how it might affect the outcome. For example, let's say you're planning a weekend trip that will cost $500. you can add a hypothetical $500 expense to your projected timeline. The app will then instantly recalculate and redraw your future balance graph, showing you the potential impact of that spending. This allows you to ask and visualize the answers to practical questions. If I buy these concert tickets today, will I still have a comfortable buffer in my account when my rent is due next week? Or, what would happen to my cash flow if I picked up a side gig that brought in an extra $200 a month? By allowing you to model these one-time events, the app becomes a personal financial sandbox. It's a space where you can explore the potential consequences of your decisions in a safe, simulated environment, without giving you any specific advice. It's a tool for personal discovery and planning. In summary, the features we've covered in this chapter help you look ahead. Cash flow analysis gives you an understanding of your financial patterns. Upcoming transaction projections organize your known financial events. And future balance simulators use all of this information to create a potential roadmap of your finances, allowing you to run what-if scenarios to make more informed, proactive decisions. These tools are designed to enhance your awareness and help you plan, transforming your financial management from a reactive process to a forward-thinking one. In our next chapter, we will explore features specifically designed to help you act on these insights by focusing on savings goals and automation. Thank you for joining me. Hello and welcome back. In our previous chapter, we explored the forward-looking features of cash flow analysis and balance projections, which help you anticipate your financial future. In Chapter 7, we're going to discuss how you can act on those insights. This chapter is all about intentionality, using tools that help you actively set aside money for the things that are important to you. We'll be diving into the world of savings goals and the power of automation. The features we'll discuss today are designed to bridge the gap between your intentions and your actions. Many of us have financial goals, but the day-to-day demands on our money can sometimes get in the way. These tools are built to help you be more deliberate and consistent with your savings strategy, based on the goals and rules that you yourself define. As always, this information is for educational purposes and is not a recommendation for any specific savings plan. Let's start with the feature that gives your savings a purpose: dedicated savings goal creation and tracking. A simple savings account shows you a number, but a goal-setting tool tells you a story. Within a finance app, you can create specific, named buckets or goals for your savings. Instead of one generic savings fund, you might have 3 separate goals. One named Emergency Fund, with a target of $5,000, another called Hawaiian Vacation, with a target of $3,000, and a third labeled New Laptop, with a target of $1,500. The act of naming a goal and assigning it a target amount is psychologically powerful. It transforms an abstract idea into a concrete objective. The best apps enhance this with visual progress trackers. You'll often see a progress bar or a circle that fills up as you contribute money to each goal. The app can also provide informational feedback such as, you are 60% of the way to your vacation goal, or, at your current savings rate, you could reach your laptop goal by December. This regular, visual feedback can be highly motivating and helps keep your long-term objectives top of mind in your daily financial life. Of course, having a goal is one thing, consistently funding it is another. This is where automation comes in. The most straightforward and widely used feature is the set and forget automated transfer. This tool is the digital equivalent of the classic advice to pay yourself first. Within the app, you can set up a simple rule to automatically transfer a specific amount of money from your primary checking account to one of your savings goals on a regular schedule. For instance, you could instruct the app to move $50 every Friday into your emergency fund. Once you set this rule, the process happens in the background without any further action required from you. This builds discipline into your financial system. It removes the need to rely on willpower, or to remember to make the transfer yourself. By treating your savings contribution like any other recurring bill, you prioritize your future goals and build your savings consistently over time. Next, let's look at a popular feature that uses a different approach to automation: roundup or spare change savings. This method is designed for micro-saving, allowing you to save in very small increments that you may not even notice. Here is how it typically works. You link your debit or credit card to the feature. When you make a purchase, the app will round up the transaction amount to the nearest dollar. The difference, the spare change, is then automatically transferred to a designated savings goal. For example, if you buy a coffee for $3.50, the app will round the transaction to $4 and automatically move the 50-cent difference into your savings. A purchase of $8.20 would result in an 80-cent transfer. Each individual transfer is small, but when applied to every purchase you make, These small amounts can accumulate into a significant sum over the course of a year. It's a way to continuously fund your savings goals without feeling the impact of a large, one-time transfer. Beyond these simple rules, many apps now offer more advanced, smart, or rule-based savings features. These allow you to create more dynamic, if-then style instructions for your money. You are the one who sets the rules based on your own financial life and preferences. For example, you might be able to set a rule based on your income, such as, anytime I receive a direct deposit over $500, automatically transfer 10% of it to my new car goal. Another type of rule could be based on your spending habits. You might set a rule that says, at the end of each month, if there is any money left over in my dining out budget, automatically sweep the remaining amount into my vacation fund. These more sophisticated rules allow you to customize your savings strategy to a very fine degree. The app simply acts as the engine to execute the commands that you have created, helping to automate your good intentions in a way that is tailored to your unique financial situation. In this chapter, we've explored the features that help you become a more intentional saver. Goal-setting tools give your savings a clear purpose and provide the motivation to keep going. Automation features, from simple recurring transfers to intelligent, rule-based systems, help ensure that you are consistently working toward those goals. These tools are all about aligning your daily financial behavior with your most important long-term aspirations, turning your goals from a distant dream into an achievable plan. In our next chapter, we will look at how finance apps consolidate all of your activities into comprehensive financial reports and summaries, giving you a periodic overview of your progress. Thank you for joining me. Hello and welcome back. In our last chapter, we focused on the active process of saving, exploring how goal setting and automation features can help you align your actions with your aspirations. Now, in Chapter 8, we're going to see how all of your financial activities, your earning, spending, saving, and investing, come together. We will explore the various financial reports and summaries that these apps can generate. Think of this chapter as a visit to your personal data library, where all your financial stories are collected, organized, and presented back to you in a clear and understandable way. The fundamental purpose of in-app financial reporting is to distill a vast amount of raw data into meaningful insights. Your app processes thousands of transactions over the course of a year. It would be impossible to see the big picture by looking at them one by one. Reports take this complex data and transform it into simple, visual summaries. These features are designed to be a tool for periodic reflection, allowing you to step back from the day-to-day noise and review the clear, factual trends of your own financial behavior. Let's start with the most common and frequently used type of report, the spending and expense summary. This is a detailed look at where your money has gone over a specific period, whether it's the last week, the last month, or the last quarter. These reports are often presented as a colorful pie chart, which is an excellent way to visualize proportions. At a glance, you can see what percentage of your total spending went toward housing, food, transportation, or entertainment. The app might also present this data as a bar graph, ranking your spending categories from highest to lowest. Beyond a simple snapshot, many apps also provide trend analysis. For instance, you could pull up a report that shows your spending in the groceries category over the last 6 months. This would be displayed as a line or bar chart, allowing you to see if your spending in that area has been increasing, decreasing, or staying consistent over time. The goal of these reports is not to pass judgment, but to provide a factual, data-driven mirror of your spending habits for your own review. Next is the cash flow comparison report. This summary moves beyond just expenses and puts your spending in the context of your income. As we touched on in a previous chapter, your net cash flow is the difference between the money that comes in and the money that goes out. A cash flow report visualizes this dynamic over several periods, typically month by month. You might see a bar chart where for each month, a green bar represents your total income, and a red bar represents your total expenses. This makes it immediately obvious which months you had a surplus, meaning more money came in than went out, and which months you had a deficit. This high-level view is crucial for understanding the overall rhythm of your financial life, and for identifying patterns you may not have noticed otherwise. Zooming out even further, we have the net worth history report. We introduced the concept of net worth tracking in an earlier chapter, but its presentation as a long-term report is one of its most powerful applications. This feature is typically displayed as a single-line graph that plots the value of your net worth, your assets minus your liabilities, over a period of months or even years. This is arguably the ultimate indicator of your financial trajectory. While a spending report shows your daily habits and a cash flow report shows your monthly balance, The net worth report shows the cumulative effect of all your financial decisions over the long run. Watching this line trend upward provides a visual representation of your progress. It reflects your debt being paid down, your savings growing, and your investments potentially appreciating in value. It consolidates all of your financial efforts into a single, powerful data visualization. Finally, many apps like to tie everything together at the end of the year with a year-in-review summary. These annual reports are often designed to be more engaging and personalized. They pull key data points from your entire year and present them in an interesting, digestible format. You might see summaries like, you spent a total of X dollars on coffee this year, or your biggest savings month was May, or you successfully reached 3 of your savings goals. These reports serve as a capstone for your year, providing a moment for reflection on your financial journey. They consolidate a year's worth of data into a high-level overview, highlighting trends, milestones, and interesting facts from your own activity. In summary, the reporting and summary features within a finance tracker act as your personal financial archive. Spending reports show you where your money went. Cash flow reports compare what you earned versus what you spent. Net worth reports track your overall financial growth over time. And annual summaries provide a reflective look back on your year. These tools are designed to increase your awareness by presenting your own data back to you in clear, simple, and insightful ways, empowering you to better understand your own financial habits. In our next chapter, we will explore the features that allow you to customize your experience, such as creating custom alerts and personalizing the app's interface to suit your needs. Thank you for joining me. Hello and welcome back. In our last chapter, we explored the world of financial reports, seeing how a finance tracker can summarize and present your financial data for periodic review. Today, in Chapter 9, we're going to shift our focus from the data itself to how you interact with it. This chapter is all about personalization. We'll be covering the features that allow you to customize the app's behavior and set up personalized alerts, transforming a generic tool into a system that is finely tuned to your specific needs and priorities. A powerful software tool should not be a one-size-fits-all solution. Your financial life is unique, and the way you monitor it should be as well. Customization features allow you to control what you see, how you see it, and when the app communicates with you. These tools are designed to make the app more relevant and effective for you personally, ensuring you get the information that matters most to you, right when you need it. As always, this information is for educational purposes, describing the functionality of the software itself. Let's begin with one of the most practical and widely used personalization features: customizable alerts and notifications. A finance app can see everything happening across your accounts in real time, and alerts are how it can proactively share important information with you. These are not random interruptions. You are in complete control of which notifications you want to receive. Think of it as telling your financial assistant exactly what to watch out for on your behalf. One of the most common alerts is the low balance warning. You can set a specific threshold for any of your checking or savings accounts. For instance, you might tell the app, "Notify me if my checking account balance ever drops below $500. If a transaction causes your balance to fall below that user-defined level, the app will immediately send you a push notification or an email. This simple alert can be incredibly effective at helping you avoid overdraft fees or failed payments by giving you a chance to transfer funds before a problem occurs. Another crucial notification is the unusual spending alert. These are designed to catch potential fraud or simply flag activity that is out of the ordinary for you. The app learns your typical spending habits over time. You can often set a rule such as, "Alert me to any single transaction over $300, or let me know if there are multiple transactions at the same merchant in a short period." These alerts provide an extra layer of security and peace of mind, allowing you to quickly verify that a large or unusual purchase was indeed made by you. You can also set up custom budget and category alerts. In an earlier chapter, we discussed creating a budget. Alerts make that budget a more dynamic tool. You can instruct the app to notify you when you are approaching the limit in a specific category. For example, "Alert me when I have spent 90% of my restaurant budget for the month." This turns your budget from a passive report into a proactive guide, giving you a gentle nudge that can influence your spending decisions in the moment. We have also already mentioned bill reminders, which are another critical type of alert that helps you stay on top of your payment due dates. Beyond alerts, another key area of personalization is the ability to create custom categories and tags. While most apps come with a robust set of default spending categories like groceries and gas, your life may have unique expenses that don't fit neatly into these predefined buckets. Perhaps you have a specific hobby, like woodworking, and you want to track all related expenses in a dedicated woodworking category. Or maybe you're planning a specific event, like a wedding, and want to categorize all related spending under a wedding fund tag. This level of customization allows you to organize your financial data in a way that truly reflects your personal life and priorities, making your spending reports far more meaningful. Building on that, many apps now offer a customizable dashboard or home screen. The dashboard is the first thing you see when you open the app, and it should show you the information that is most important to you. Customization features may allow you to rearrange the different modules or widgets on the screen. If tracking your net worth is your primary motivation, you can move that report to the very top. If you are focused on a specific savings goal, you can pin that goal's progress bar right on the main screen. If you're more concerned with your upcoming bills, you can prioritize that view. This ability to tailor the user interface ensures that you can get your most vital financial information with a single glance, without having to navigate through multiple menus. Finally, let's talk about report customization. When you generate a report on your spending, you should be able to control the parameters. Good apps allow you to create custom reports based on a variety of factors. For example, you could generate a report that shows your spending only from a specific account, within a custom date range, and excluding certain categories. This flexibility allows you to perform a much deeper analysis of your own financial data, helping you find the specific answers to the specific questions you have about your money. In summary, customization and alert features are what make a finance app truly your own. Custom alerts for low balances, large purchases, and budget limits act as your personal financial watchdogs. The ability to create your own categories and tags allows you to structure your data in a way that makes sense for your life. And a customizable dashboard ensures that the information most relevant to you is always front and center. These features are all about putting you in the driver's seat, allowing you to fine-tune the app to perfectly match your financial focus and goals. In our next chapter, we will discuss features related to security and privacy, a topic of the utmost importance when dealing with sensitive financial data. Thank you for joining me. Hello and welcome back. Throughout this series, we have explored a wide array of features that make finance tracker apps powerful tools for managing your money. We've discussed everything from budgeting and investment tracking to custom alerts. But all of these features are built upon a single, non-negotiable foundation: trust. In Chapter 10, we will address the most critical topic of all: security and privacy. We'll explore the essential features and protocols that reputable apps use to protect your sensitive financial information and ensure your data is handled responsibly. When you use a finance tracker, you are granting it access to view your financial life. It is therefore absolutely essential that you understand how a high-quality app safeguards this information. The features we are about to discuss are not just nice-to-haves. They are the fundamental requirements for any application you consider connecting to your financial accounts. As always, this chapter is for educational purposes, designed to help you understand the security and privacy landscape so you can be a more informed user. Let's start with the technology that protects your data as it moves between your bank and the app. This is accomplished through bank-level or military-grade encryption. You will often see the term 256-bit AES encryption used. While the technical details are complex, what this means in simple terms is that your data is scrambled into a virtually unbreakable code while it is in transit, and while it is stored on the company's servers. This is the same level of encryption used by major banks and financial institutions around the world. It ensures that even if the data were to be intercepted, it would be completely unreadable and useless to unauthorized parties. Next, let's talk about how the app protects the connection to your bank itself. We touched on this in our first chapter, but it bears repeating in detail. The standard for reputable apps is to use read-only access. When you connect a financial account, you are providing your login credentials through a secure, third-party data aggregation service. This service establishes a read-only or view-only connection. This is a critical distinction. It means the finance app has the permission to view your account balances and transaction history, but it does not have the permission or the ability to move money, make transfers, or perform any other actions within your account. Your money stays securely where it is, under your full control. Another essential layer of protection for your own account with the finance app is multi-factor authentication, often referred to as MFA or two-factor authentication, 2FA. You are likely already familiar with this from your other online accounts. It means that logging in requires more than just your password. It requires a second piece of information to verify your identity. This second factor is typically a one-time code sent to your phone via text message, a code generated by an authenticator app, or a biometric verification like your fingerprint or Face ID. Enabling multi-factor authentication is one of the most effective steps you can take to prevent unauthorized access to your account, even if your password were to become compromised. Beyond the technological safeguards, there is the equally important topic of a company's policies regarding your data. This is where a clear and transparent privacy policy becomes a critical feature. A privacy policy is a legal document that explains how a company collects, uses, stores, and shares your data. While these documents can be long, a trustworthy company will make its policy easy to find and understand. You should look for clear statements that they will not sell your personally identifiable financial data to third parties. A reputable app's business model should be based on providing a service to you, the user, not on selling your private information. In the United States, financial data is also protected by laws and regulations. While we cannot provide legal advice, it's helpful to be aware that a framework of consumer protection exists. Companies that handle financial data are expected to have comprehensive security plans in place to protect customer information. When choosing an app, look for signs that the company takes these responsibilities seriously. This includes their transparency about the security measures they employ and the clarity of their privacy policy. Finally, a feature that you control is the ability to manage and revoke access. If you ever decide to stop using a finance app, or if you want to disconnect a specific account, the process should be simple and straightforward. Within the app settings, you should have a clear dashboard showing all of your connected accounts. You should be able to revoke the app's access to any of these accounts with a single click. This ensures that you are always in final control of who has permission to view your financial data. In summary, the security and privacy features of a finance tracker are paramount. Bank-level encryption protects your data in transit and at rest. Read-only access ensures the app cannot move your money. Multi-factor authentication protects your account from unauthorized logins. A transparent privacy policy clarifies how your data is handled, and robust access management tools keep you in control. Evaluating an app's commitment to these security and privacy principles is the most important step you can take before you even begin to explore its other features. In our next chapter, we will discuss features related to customer support and educational resources, which help you get the most out of your app and improve your financial knowledge. Thank you for joining me. Hello and welcome back. In our last chapter, we covered the critically important topic of security and privacy, the bedrock of trust upon which any good finance app is built. Now that we've established the importance of a secure foundation, Chapter 11 focuses on the support structures built on top of it. We'll be exploring the features related to customer support and the educational resources that help you navigate both the app and the complexities of personal finance. A great tool is only effective if you know how to use it, and these features are designed to provide the help and knowledge you need along the way. Let's begin with a feature that provides a crucial safety net: accessible customer support. No matter how well designed an application is, questions and technical issues can always arise. A transaction might be miscategorized, you might have trouble connecting a new account, or you may simply have a question about how a specific feature works. Knowing that there is a reliable and responsive support system in place provides significant peace of mind. High-quality apps typically offer several support channels to accommodate different needs. For quick, simple questions, many offer in-app chat or messaging support. This allows you to connect with a support agent directly within the app, often getting a response in just a few minutes. For more detailed or less urgent issues, email support is a standard option, allowing you to explain your situation thoroughly. And for the most complex problems, some services, particularly premium ones, offer phone support, giving you the ability to speak directly with a human representative to walk through a solution. The availability of multiple, responsive channels is a key indicator of a company's commitment to its users. In addition to direct help from a person, a vital support feature is a comprehensive, self-service knowledge base. Think of this as the app's instruction manual and encyclopedia, available to you 24 hours a day. A good knowledge base, often called a help center, is a searchable library of articles, guides, and frequently asked questions. Here you can find step-by-step tutorials on how to perform specific tasks, such as how to create a custom budget, how to generate a spending report, or how to set up a low balance alert. This is the first place you should look for answers, as it can often resolve your issue instantly without you having to wait for a support agent. Beyond helping you use the tool, many finance apps also aim to help their users become more financially literate. This is where in-app educational resources come into play. It is important to state that these resources are provided for general informational and educational purposes only. They are not a substitute for personalized advice from a qualified financial professional. Their goal is to empower you with knowledge. One of the most common forms of this is a company blog or learning center, filled with articles and guides on a wide range of personal finance topics. These articles are designed to explain financial concepts in simple, easy-to-understand language. For example, you might find posts that explain the general factors that influence a credit score, articles that describe the difference between various types of savings accounts, or guides that break down common budgeting methods. The purpose of this content is to provide context for the numbers you see in your app, helping you to better understand the principles of personal finance. Building on these articles, some platforms also provide financial calculators and simulators. These are interactive tools that allow you to explore hypothetical financial scenarios. For instance, you might find a loan calculator where you can input different loan amounts, interest rates, and term lengths to see how they might affect your monthly payment and the total interest paid. Another common tool is a savings goal calculator, which can help you visualize how different contribution amounts could impact the timeline for reaching a specific financial goal. These simulators are powerful educational features. They are not predicting your future, but rather demonstrating the mathematical relationship between different financial variables, allowing you to conduct your own what-if analyses in a safe, informational environment. In summary, the support and educational features of a finance app are what transform it from a simple piece of software into a comprehensive service. Accessible customer support through various channels provides a crucial safety net for when you need help. A self-service knowledge base empowers you to find your own answers quickly. And a rich library of educational resources, from explanatory articles to interactive calculators, offers you the opportunity to increase your financial knowledge at your own pace. These features demonstrate a company's investment not just in their product, but in the success and empowerment of their users. In our next chapter, we will look at more specialized features, including how some apps integrate with other financial services and offer tools tailored for couples or families. Thank you for joining me. Hello and welcome back. In our last chapter, we explored the vital support systems of customer service and educational resources that surround a great finance app. Today, in Chapter 12, we are expanding our view even further. We'll look at specialized features that address unique financial situations, and we'll see how these apps are becoming powerful hubs that connect and integrate with other services. This chapter is about how these tools adapt to more complex needs, such as managing finances with a partner and streamlining your entire financial ecosystem. Let's begin with a set of features designed for a very common scenario: managing shared finances with a partner or family. Handling money as a couple or a household comes with its own set of challenges and needs. Recognizing this, many modern finance apps have built-in tools specifically for financial collaboration. It is important to note that these are organizational tools, designed to provide clarity for those who have already chosen to manage their finances together. They do not offer relationship or financial advice. The cornerstone of these features is typically a shared dashboard. This allows two or more people to link their various accounts to a single, unified view. This immediately creates a transparent financial picture for everyone involved. The best apps offer a great deal of flexibility. For example, you and your partner could connect your joint checking account, which you both see, but you could also connect your individual credit cards. You can then label accounts as shared, personal partner 1, or personal partner 2. This allows you to see both your combined financial picture and maintain individual privacy and autonomy where you choose. Building on this shared view, you can engage in joint budgeting. You can collaboratively set and track spending targets for shared expense categories like groceries, utilities, or kids' activities. When a purchase is made from a shared account, it updates the budget for both partners in real time. This shared visibility helps ensure that both partners are on the same page and working toward the same goals, turning budgeting from an individual task into a team effort. Now let's zoom out and discuss how these apps connect with the wider world of financial services. This is done through third-party integrations. A truly powerful finance hub doesn't exist in a vacuum. It communicates with other tools you use. One of the most practical examples of this is tax software integration. As we discussed in our chapter on taxes, a finance app is excellent at organizing your potentially tax-relevant expenses throughout the year. An integration takes this one step further. It allows you to directly export your year-end summary report into popular tax preparation software. This can save a tremendous amount of time and reduce the risk of manual data entry errors when you or your accountant are preparing your tax return. Another useful integration is with real estate data services. In our chapter on net worth, we talked about manually adding the value of your home. Some apps can integrate with services like Zillow to automatically pull in an estimated market value for your property and update it periodically. This provides a more dynamic and realistic valuation for one of your biggest assets, giving you a more accurate and up-to-date calculation of your true net worth. Finally, let's touch upon some specialized tools for freelancers and small business owners. The financial life of a self-employed individual is often more complex than that of a traditional employee. Some finance apps cater to this audience with specific features. For example, in addition to tracking expenses, they might include simple invoice generation tools, allowing you to create and send professional invoices to your clients directly from the app. They may also help with accounts receivable tracking, giving you a clear list of who owes you money and when their payments are due. These features combine elements of personal finance tracking with basic business bookkeeping, providing a single platform to manage both sides of a freelancer's financial world. In this chapter, we've covered the features that take a finance tracker from a personal tool to a collaborative and integrated hub. Shared finance features provide transparency and a platform for teamwork for couples and families. Integrations with tax software and other services streamline your workflows and create a more connected financial ecosystem. And specialized tools for the self-employed address the unique challenges of managing business and personal finances in one place. These advanced features demonstrate how finance apps are evolving to meet a wider and more complex range of user needs. In our next chapter, we will discuss the different pricing models for these apps, exploring the features you can typically expect from free versions versus paid subscription services. Thank you for joining me. Hello and welcome back. In our last chapter, we explored the specialized and integrated features that are making finance apps more collaborative and connected than ever before. Now, in Chapter 13, we are going to address a very practical question that you'll face when choosing an app. Should you use a free version or a paid, subscription-based service? We'll explore the business models behind these apps and the typical features you can expect from each. The goal of this chapter is to provide a clear, balanced overview of the landscape, so you can make an informed choice that best suits your needs. It's important to state up front that this is not a review of any specific app, nor a recommendation for one model over the other. The best choice is entirely personal and depends on your individual financial goals, the complexity of your finances, and your comfort level with different business practices. Let's start by looking at the free model. Free-to-use finance and budgeting apps can be incredibly powerful. For many users, they offer all the functionality needed to gain control over their finances. A typical free app will provide the essential core features we discussed in our earliest chapters. This usually includes the ability to link your checking, savings, and credit card accounts, automatic categorization of your transactions, and fundamental budgeting tools that allow you to track your spending against your targets. For someone who is just getting started with financial tracking, a free app is an excellent and often sufficient entry point. This, of course, leads to a logical question. If the service is free, how does the company make money? There are a few common business models. The first and most obvious is in-app advertising. The company may display banner ads or other promotional content within the application. A second, more common model is through referral partnerships. An app that understands your financial profile might present you with targeted offers for other financial products, such as a credit card with certain rewards, a personal loan, or a high-yield savings account. If you sign up for one of these products through the app's developer receives a commission from that partner institution. Finally, some companies may use aggregated and anonymized data for market research and insights. It is critical to understand what this means. As we discussed in our security chapter, a reputable company will not sell your personally identifiable information. However, they may strip out all personal details from the data of thousands of users, combine it, and analyze the resulting anonymous trends, which can then be sold as market research reports. In any free model, there is a value exchange. You are often paying for the service not with money, but with your attention or your data. Now let's explore the paid or subscription-based model. With these apps, you pay a recurring monthly or annual fee for access to the service. This direct payment changes the fundamental business relationship. Here, you are the customer, not the product. This generally leads to two primary benefits: a more robust feature set and a business model that is directly aligned with your interests, particularly regarding privacy. Subscription-based apps almost never have third-party ads. They also have no need to monetize your data through referrals or market research, so their privacy policies are often stricter. The subscription fee is used to fund the development of more advanced and specialized features. Many of the powerful tools we have discussed in previous chapters are often reserved for these premium tiers. This can include advanced investment portfolio tracking and analysis, detailed cash flow and future balance projections, specialized tools for managing shared finances with a partner, deep customization of reports, and priority customer support. If your financial life is more complex, or if you desire these deeper analytical tools, a subscription service may be a better fit. So how do you make an informed choice between these two models? The decision comes down to a personal cost-benefit analysis. To guide your thinking, here are a few questions you can ask yourself. First, what are my primary goals right now? Am I simply trying to see where my money is going, or am I actively trying to manage a complex investment portfolio and plan for long-term goals? Second, which specific features are must-haves for me? Make a list of the features we've discussed that you feel you absolutely need. Third, what is my comfort level with the business models of free apps? Am I okay with seeing ads and offers for other products? Finally, what value do I place on an ad-free experience and access to premium support and features? A great practical approach is to take advantage of free trials. Many subscription-based apps offer a trial period, allowing you to experience their full feature set for a limited time. This is the best way to determine if the premium tools provide enough value to you personally to justify the cost. In summary, there is no universally better option. Free apps provide fantastic core functionality and are a great starting point for many. They are supported by business models like advertising and referrals. Paid apps offer more advanced features and a more private, user-focused experience in exchange for a subscription fee. By understanding these differences, you can choose the tool that best aligns with your financial needs, your personal preferences, and your budget. In our next chapter, we'll discuss the practical side of getting started, how to set up your chosen app effectively, and most importantly, how to build a lasting habit of financial tracking. Thank you for joining me. Hello and welcome back. In our last chapter, we navigated the practical decision of choosing between a free or paid finance app. Now in chapter 14, we move into the most important phase of all, implementation. A tool, no matter how powerful, is only valuable when it is used effectively and consistently. This chapter is a practical guide to getting started with your new finance tracker, and, more importantly, offers strategies for building a lasting habit of financial awareness that will serve you for years to come. The initial setup of your app is like laying the foundation for a house. It's worth taking the time to do it right. Rushing through this process can lead to confusing data and a frustrating experience. A thoughtful start, however, can set you on a clear path to success. The first practical step is to gather all your financial logins. Before you even begin, take a few minutes to collect the online usernames and passwords for the financial accounts you plan to connect. This will make the setup process smooth and uninterrupted. Next, it's time to connect your accounts. A good approach is to start with your core accounts first. These are the accounts you use for the majority of your daily transactions. Typically your main checking account and your primary credit card. By linking these first, the app will immediately populate with the data that is most relevant to your day-to-day spending, giving you instant, actionable information to work with. You can always add savings, investment, and loan accounts later. Once your accounts are linked, the app will import your recent transaction history, often from the last 30 to 90 days. This leads to the most crucial part of the setup process, the initial review and cleanup. Set aside about 30 to 60 minutes for this one-time task. Go through your recent transactions and check the categories the app has automatically assigned. While the automation is smart, it's not perfect. You might find a purchase from a big box store categorized as groceries when it was actually home improvement. By manually correcting these, you are essentially training the app's algorithm to better understand your unique spending habits. This is also the perfect time to create any custom categories you need, ensuring the data is organized in a way that truly reflects your life from day one. With your app set up and your data looking clean, the focus now shifts from setup to habit. The key to long-term success with a finance tracker is not about making massive, drastic changes overnight. It's about building a small, sustainable routine. A great way to begin is to start with awareness, not immediate action. For the first couple of weeks, give yourself permission to simply observe. Don't worry about building a strict budget or cutting spending. The initial goal is just to get a clear, honest picture of where your money is currently going. This observation-only period removes pressure and allows you to understand your baseline before you start making adjustments. To maintain this awareness, it's helpful to schedule a regular financial check-in. This doesn't have to be a long, drawn-out process. Many people find success with a daily money minute. This is just a 60-second check-in at the end of the day to look at any new transactions that have appeared and make sure they are categorized correctly. Others prefer a weekly review, setting aside 15 minutes every Sunday evening to look at their weekly spending report, review their budget progress, and see their upcoming bills. The specific timing doesn't matter. What matters is choosing a consistent rhythm that works for your schedule and sticking to it. As you get into the rhythm of tracking, it is vital to embrace imperfection. There will be months where you go over your budget in a certain category. Life is unpredictable. An unexpected car repair or a last-minute trip can throw off even the best-laid plans. It is crucial to view your finance app not as a strict report card that gives you a pass or fail grade, but as a compass. Its job is simply to show you where you are. If you get off track, the app helps you see it quickly so you can make adjustments and get back on course. The goal is progress over the long term, not perfection every single day. Finally, the most powerful way to stay motivated is to keep your why in sight. This is where the goal-setting features we've discussed become so important. Make sure your most important savings goals are visible on your app's dashboard. Seeing that progress bar for your emergency fund or your dream vacation slowly fill up provides a constant, tangible reminder of why you're taking the time to track your finances in the first place. It connects the simple, daily habit of checking your app to the meaningful, long-term aspirations you have for your life. In this chapter, we've walked through the practical steps of getting started and building a habit. A successful journey begins with a thoughtful setup, followed by a commitment to a small, consistent routine. By starting with observation, scheduling regular check-ins, embracing imperfection, and staying connected to your goals, you can transform a finance tracker from a simple app into a powerful and permanent ally on your path to financial wellness. In our final chapter, we will summarize the key features we've covered and take a brief look at the future of personal finance technology. Thank you for joining me. Hello, and welcome back for the 15th and final chapter of our series. Over the last 14 chapters, we have taken a deep and comprehensive journey through the world of finance tracker apps. We've dissected their features, from the most basic to the most advanced. We've discussed how to choose a tool and how to build a lasting habit. In this concluding chapter, we will do two things. First, we'll summarize the core principles and key takeaways from our journey together. And second, we'll cast our eyes to the horizon and explore the exciting future of personal finance technology. Let's begin by revisiting the fundamental themes of our series. If there is one central principle to take away, it is this: awareness is the foundation of financial wellness. The primary and most powerful function of any finance tracker is to provide a clear, honest, and real-time picture of your financial life. Features like securely connecting all your accounts into one place, the automatic categorization of your spending, and the generation of clear spending reports are all designed to answer that fundamental question. Where is my money going? This clarity is the essential first step. From that foundation of awareness, we move to the theme of transforming awareness into intention. It's one thing to see your financial data, it's another to act on it. Features like budgeting tools, dedicated savings goals, and the power of automation are all designed to help you be more deliberate with your money. They help you create a plan known as a budget, and then build systems to help you follow that plan consistently, turning your long-term aspirations into an achievable reality. We then zoomed out to explore the importance of the big picture view. Features like net worth tracking, which provides the ultimate measure of your financial progress over time, and credit score monitoring, which gives you a key metric of your financial health, are what connect your daily habits to your overall trajectory. They help you see the long-term cumulative effect of all your small, consistent financial decisions. And finally, we established that all of this must be built on a platform of trust and empowerment. We covered the non-negotiable importance of security and privacy, the value of responsive customer support, and the benefit of educational resources. These elements ensure that you are not only using a safe tool, but that you are also empowered to use it effectively and to grow your own financial knowledge along the way. The overarching message is that these apps are powerful informational tools designed to support your own decision-making process. Now let's look to the future. The technology in this space is evolving at a rapid pace, and the finance apps of tomorrow will likely be even more intelligent and integrated. One of the biggest drivers of this evolution is artificial intelligence, or AI. In the future, AI will likely enable apps to provide deeper, more personalized insights based on your own data. Imagine an app that doesn't just categorize your spending, but recognizes patterns. For example, it might notice a recurring charge for a subscription you haven't used in months and proactively ask if you'd like to keep it. This isn't financial advice, it's smart data-driven assistance. We can also expect to see a trend towards hyper-personalization and proactive assistance. As these tools learn more about your financial rhythms, they may be able to offer more predictive help. For example, an app might be able to project a potential cash shortfall not just weeks, but months in advance, based on your historical spending during that time of year, giving you even more time to plan. Another major trend is the move toward the financial super app. We're already seeing apps that combine budgeting, saving, and investing. In the future, we can expect even deeper integration. Imagine a single platform where you can manage your banking, track your budget, monitor your investments, pay your bills, and perhaps even handle your insurance needs, all in one seamless, interconnected experience. The way we interact with these apps is also likely to change, with the rise of conversational interfaces. Soon, you may not need to tap through menus. Instead, you could simply ask your phone, "How much do I have left in my grocery budget for the month?" Or "What was my net worth at the start of the year?" and receive an instant spoken response. The journey we have taken through this series has been about understanding the tools available to us today, but the core principles will remain the same, no matter how advanced the technology becomes. Financial wellness will always begin with awareness, grow with intention, and be sustained by consistent habits. Technology is a powerful ally on this journey, but it is just that, an ally. You are the one in the driver's seat. The true power of these tools is that they provide the information and the structure you need to make your own best decisions. Thank you for joining me on this comprehensive exploration of finance tracker apps. I hope this series has provided you with valuable knowledge and has empowered you to take the next step on your own financial journey, with clarity, confidence, and control.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.